Is that Monetary Policy Committee about to wind up its meeting, and of course it looks like a tough call this afternoon on whether rates will be cut or not.
Yeah, it's probably one of the closest meetings we've had for some time. The market pretty much split down the middle. In fact, over the last few trading days, we've seen the market tend to prefer the outside chances of a rate cut than where we've previously sat, with most economists calling no change, the bias being to no change there. The market has moved, as I say, more towards the chances of a cut.
And when are they expecting that cut, James? Do you think it'll be today, or do you think they might hold off until September?
Yeah, that's the important question. There's two ways of looking at it. Does the governor, do the MPC look to more data? Do they want to see the effects of the World Cup? Are they concerned that may in fact muddy the waters a little bit and would prefer to implicate any stimulus sooner rather than later? It's difficult to say. Looking at the communication that has come out from the MPC thus far, there's been no real indication as to the timing of any sort of cut.
Well, James, what's really changed since the last MPC back in April? And of course, this meeting was pushed up by 1 month because of the World Cup, so it has been 3 months. What's changed in the economy since then?
Well, if you had to look at the communications that we've seen, after the March MPC, where rates were adjusted down to 6.5, the comments that came out since then by the governor were that the risks to the inflation and growth outlook were pretty evenly balanced. So unless there was a substantial change to that, there would be no need to change the interest rate policy from there. Since then, we've seen over the last couple of weeks comments coming out from the governor highlighting the downturn in the global economy having serious implications for domestic growth. She highlighted that the Europe situation, the high debt levels there being a major concern, and also the USA with the consumption levels not driving any growth in their economy. Certainly in her last statement, the market tended to feel it was a more dovish comment, and certainly highlighting those fears for growth. The only counterbalance to that were perhaps her views on the employment level and her concerns that the wage demands in the employment sector being in some areas double inflation. Without the sort of the productivity increases, those certainly will be inflationary. So there was no definite clue as to her thoughts for today's meeting, but probably, if you looked at it, a more dovish comment.
Well, just looking at those wage increases, we also have public sector unions going on strike from next Thursday. They served that notice yesterday, asking for an 8.6% increase. And as you say, that's exactly double the rate of inflation that we're seeing at the moment of around 4.3%. I mean, do you think that inflation should be a concern for the Reserve Bank, though, at this stage, just given the deflationary picture they're starting to face in some economies?
It's a good point. The rest of the world certainly are in fear of deflation, specifically in the United States, with prices sitting at sort of stagnant levels, and if anything, sort of dropping to attract some sales there. So Jill Mark has certainly pushed out our inflation expectations to remain within the band to the end of 2012. So I don't think inflation is as big a concern as perhaps it was a few months ago, no.
Just taking a look at the coordination of policies, though, because we've had the Reserve Bank governor saying that you can't have loose monetary policy and weaker exchange rates, because obviously that's going to be inflationary going forward. But it is a weak exchange rate, or a slightly weaker exchange rate, that the country, well, certain quarters in the country would like to see at this stage. Do you think cutting interest rates would help to weaken the exchange rate?
It's a difficult one to answer. We've seen, traditionally higher interest rates attract foreign demand, and certainly the higher interest rates strengthen the currency. Lower interest rates traditionally should weaken the currency. That's not necessarily played out in the current economic climate that easily. So it is very difficult to say. In many cases, we've seen interest rate cuts actually leading to sort of a greater growth expectations and the currency strengthening on the back of it. So in today's climate, it is very difficult to draw a correlation between interest rates and the currency level. Certainly, there's a lot of talk, specifically President Zuma today talking about weakening the rand, and that it is a concern on government's mind at the moment. It's a really difficult thing to handle, though, the level of the rand.
Perhaps looking at the international picture at the moment, we had the US Federal Reserve Chairman Bernake given his semi-annual testimony to Congress last night, and it doesn't look like much good was said from that statement. In fact, the market's taking it pretty negatively this morning.
Yeah, that's right. The markets looked at it mainly highlighting that he had a pretty sort of demure stance in delivering that testimony. He certainly said that there is, in his opinion, not as great a chance of a double-dip recession as was previously perhaps thought. He said that conditions are unusually uncertain going forward. He mentioned that that we should look not at this earnings season, but look forward as to perhaps where the economy is going down the line, not at sort of the past levels that these numbers will be indicating. So in general, what we've seen there was US Treasury markets rallying slightly, stronger levels certainly in the 10-year, and all-time lows in the 2-year US Treasury notes.
Of course, we saw the rand weakening slightly as well from yesterday's best levels. Just going forward from today, what's the market going to be focusing on? What could potentially be rand changing here?
Yeah, I think that the next big call that we're going to be looking at will be the accompanying statement at the MPC meeting. It's difficult to say, as I say, where the rand will be going. It, at this point, seems stuck in a range of around 650 to 665. But we're going to definitely be focusing on the accompanying statement, obviously what happens to monetary policy, but more importantly, what they're thinking, and if they have if there is any comments made with regard to the strength of the currency.
James, we have to leave it there. Thanks very much for your time today.